Today we're going to be talking about how money matters. And so we'll be hearing from Kristina Glaspell. She's our employee banking specialist for Ohio State, and she works for Huntington National Bank. So I'm excited to hear. I love money. I hope everyone else does too. So I'm excited to hear what Kristina has to say. So I'll pass it over to her. Thanks for joining, everyone.
Hi, as he said, I am Kristina Glaspell, and I work for Huntington Bank. I am the contact for Ohio State employees with all the benefits that we do offer for you. So thank you for joining today, and we'll learn more about budgeting some money. So our program that we do have here, it's called Huntington Matters. It is a financial education program that Huntington has. So we'll get started. So our objectives of the presentation today would be list steps to setting financial goals, to track daily spending habits, to prepare personal spending plans to estimate monthly income and expenses, identify ways to decrease spending and to increase income, and then also to identify spending plan tools that help you manage your bills. So the first part would be setting your financial goals. So you want to make sure that you're putting a goal out for a certain time period that helps meet it. So identifying and writing down your financial goals. It's whether if you want to send your kids to college, buy a new car, make a down payment on a new home, go on a vacation, just write down them to keep track of them. And then organize your financial. So setting financial goals, write them down and determine how you would want to do them. So a short-term goal would be anything that you want to do within the year. Medium term is 1 to 3 years, and then long term is anything over 5 years. And then it would be to educate yourself. So that would be just reading books or doing seminars or anything that could help you with managing your money and growing your money. And you can also identify small steps that will help you achieve those goals over time. And then evaluate your progress. This would be just up to you on how often you would want to review. We do recommend every 6 months, but some people do it monthly. And this also helps with seeing if you're not making those goals in a timely manner, that you can reevaluate your approach and make some necessary changes for that. So why create a spending plan? It is a step-by-step way to meet expenses over a given time frame. It also helps you reduce anxiety for knowing if you have enough money to pay your bills or to meet some of your goals. And it also gives you a sense of control over your money, so you're knowing where your money goes. And also it helps you build assets because it'll improve your quality time with your family. So the steps that we have for a spending plan would be keep track of your daily spending and determine what your monthly income and expenses are, and then find ways to decrease spending, and then find ways to increase your income. So do you know where your money goes each month? So this would be the personal spending diary. When I went through a budgeting plan of my own, what my husband and I did is we printed out our yearly bank statements. And I know that that's a lot of paper, but just to give us a general idea of where our money goes each month, and then also our credit card statements. And we were able to highlight what bills we pay and what we are spending our money on monthly. We usually do a year out just because some expenses aren't monthly, like our water bill is quarterly. So sometimes when you're looking at just a monthly basis, you might not see those quarterly and yearly expenses. So that works for us. And then I know a lot of people that have done that is just highlight what all the bills are and then what you're actually spending on coffee, lunch, different things like that. It's nice to sit down and look at that. Where everything goes in a month. So when you are determining what your income and expenses are, income is anything that you have coming in. So it would be wages, self-employment, some public assistance, childcare or alimony, dividends and interest, and Social Security. So when you look at your income, your gross income is how much you make. So if you make $20 an hour, that would be your gross income. The net income would be your total income minus any deductions. Deductions could be for retirement, any medical plan that you have coming out of your paycheck, and then Social Security or anything else that you might have taken out of your paycheck. And then some Social Security benefits do include retirement, disability, family benefits, survivor, and Medicare. And then we categorize our expenses in two different ones. So our fixed expenses would be something that doesn't change per month. So a car payment and mortgage, different things that are the set amount each month. Flexible spending, it changes month to month. So your savings could be one of this. You usually should pay yourself first. So whenever you get paid, you should set it a little bit aside in your savings, and that could vary month to month. Gas or electricity or anything like that, there's different times of the year where it would be lower or higher. So you could always make adjustments on that. If you want your electric bill to go down, you can maybe not have it as cold in the summer. So it's you're able to create that flexibility for those payments. So ways to decrease your spending. The spending plan, just being able to see what you are spending each month, and you can help save more money. So there's ways that you can cut back on your spending. You could develop the spending plan just to see how much you have actually going out. And it could be a real eye-opener on how much you are able to see go out with coffee and maybe lunches to go or shopping. You can carry small amounts of cash to limit your spending. So if you're going to a concert or something, you could bring just a limited amount of money so you know that you're not going to be spending more. And then you could eliminate your use of credit cards. So that could help with your spending on that. Avoid shopping, which is hard for a lot of people, but you have to have self-control if you're looking to decrease the spending that you have. And then use coupons. I know that there's a lot of apps out there, like with Kroger, that you can download coupons. So that could just help you save money with your expenses. And then pay your bills on time. A lot of people, if you do pay your bill late, you will get late fees for that. So just make sure that you are up to date on that, because that's extra money that's coming out of your pocket that you might not have needed. And then I work with a mortgage partner who he says that you should do a mortgage refi, maybe, or not refi, but a evaluation of your mortgage once a year. So then that could be, there could be better rates out there for what you have. So that could decrease your mortgage payment if you're able to save money on there. And then also with the Kroger app that does have the coupons, you could also place your orders through the app to pick up. And I don't know about you, but when I'm at the grocery store, I see a lot of things that I might not need. And so obviously my bill goes up more. So if you're using those apps to order your food online for pickup, it might be a great way for you to decrease that spending and keep you for a budget. And so when you are going through all of these ways to do your spending plan, always just keep it in a safe place, because a lot of it does have your account numbers on it. And then organize it to make sure that you're able to find the information. So when you go to reevaluate how you are budgeting, it's just easier for you than starting all over. And then it's always recommended that you keep your tax records for 3 years. And then, as I said before, mail your payments in before the due date so you avoid those late fees. And then this slide just shows a sample of a spending plan. So we have the paychecks and the dates that you receive the money. So you're able to write that down just so you know on a monthly how much you are coming in. And then the expenses are on the other side. So that would just be writing down what you have going out each month and then the due dates for that. And then other spending plan tools that we recommend, the expense envelope system. So it is kind of like a piggy bank. So you have marked envelopes or mason jars or anything like that with a goal on the front. So if you want to take a vacation, you can put your extra change or anything in there. And it's just a way to save that money. And then you can actually see it growing in there. And then the budget box would just be to, which is a little, the accordion file, it would be used for your bills. So if you want to keep it like on a monthly basis where you say, okay, this bill is due at the beginning of this month, and then this bill is due at the later month. So you have it organized so you don't miss any of those due dates. And then the computer spreadsheet system would just be an Excel spreadsheet with just writing down your expenses and your income coming in. So it's just a sheet that you would use just to track all of those. And then what happens if there are more expenses than income for you for the month? So what payments should you make first before you pay the other bills? So always pay your rent or mortgage and food first, just to keep your household running. Then also think about the health and safety of your family when prioritizing your bills, and then also seek assistance if you need help covering expenses. And then if you're having trouble paying your loans, just always pay off the loan with the highest interest rate first, so you are saving money on there. Talk to your creditors. You could always, if you have a high balance or a high rate credit card, you could call them and see if you could work something out. And sometimes there might be ways that you could lower your interest rate so you're not paying that interest every month. And then get credit counseling, or a last resort would be to file bankruptcy. So here's some resources that we have. Huntington.com, we have a learning tab that actually has some articles about budgeting and expenses, and we do have calculators. So if you use Huntington, feel free to use that. It is open to anybody that does not use Huntington as their primary bank. And then also check your primary bank. A lot of them do have educational videos and stuff that you could use for all your budgeting. And then with Huntington, we have a spending setter on our online banking. So you can, if you have a certain spending amount that you want to do for groceries each month, you can set the tab at $300, and then we will alert you when you're getting close to that. So it's kind of a backup that is that bug in your ear, like, oh, you're spending a little too much on going out to eat and different things like that. So it's a great option that we have here at Huntington. So also look into your online banking to see if you have anything like that through your financial institution. And then apps for your phone or computer. There are tons of budgeting apps out there. We have Quicken. You have one of my coworkers uses Mint. So just look at your different apps that you have on your phone, and you could always find a budgeting app there. And then online courses or books. There are tons of different budget and goal books that you can do. A friend of mine used the Dave Ramsey book and really helped her with her finances. So just look at the different resources that you do have through the online and through the phone, and obviously with your financial institution. And so in conclusion, you learned the benefits of budgeting, and then how to do a spending plan to track your expenses, and then other considerations to keep in mind when you're planning your budget.
All right. That was great. We have a couple of questions in the chat. So first, one person asked, doesn't reevaluating your mortgage rates affect your credit score?
Not if you are doing an application, yes, but it doesn't hurt your credit score if you want to call and ask what the current rates are that time. But yes, if you do take an application, it would ping your credit.
Okay, so we've got that one. And then are you able to elaborate a bit more on evaluating your mortgage each year? So similar question, just looking for a little bit more elaboration, I think.
So rates, I'm not a mortgage officer, but I obviously work with one and work at a bank. So rates change every day. Right now, rates are around 3%. So if you're paying 4.5% for your mortgage, definitely reconsider a refinance. And I have a mortgage officer that I work with. And then obviously if you work or use a different financial institution, you can call a local branch to be in contact with a mortgage officer. And then they could just, if you have your mortgage balance and then what your house might be worth, and then a general idea of what your credit score is, most mortgage officers can just give you a estimated monthly payment. So you could see if you're saving money that way. And we just recommend doing it on a yearly basis just because rates do change periodically.
Someone asks, what are some resources in how to gain additional income when you're already a full-time employee and family?
So a lot of it would be just reevaluating what you're spending on. If you're paying a $200 cable bill, it might be an option to do different things, and that could be saving money for your family. Getting a second job or asking for a raise at work. There's different ways to try to help bring in more income. Garage sales. I mean, I'm just trying to think of things that I do in my personal life that try to help with that. Was there a second part of that question, David?
Nope, that was it.
Okay,
just looking for some additional thoughts on how to save or raise additional income. One person asks, what would you recommend as a good credit score to maintain?
Well, we look, our top tier here at Huntington is anything over 760. So credit scores can go up to 850. We do not lend credit. I think it's at 660 or 630. I would probably maintain over 700 if you can. That would probably be the mid range for that. But it does affect your rate. So if you're looking for a car and you have a higher credit score, then you could get possibly a better interest rate on that.
Got a number of questions coming in. One person wanted to know if it would be okay to share your contact information just to chat more about personal financing.
Yes.
If you say it, I can type it in.
Oh, here it is. I'm like, I
Great.
thought it was on the slide. So yes, it was the last slide. So there's my email and my phone number.
Awesome. We really appreciate that. One person wants to know, and if you know this, doesn't Huntington offer a discount to Ohio State employees on loans? They were thinking it might be like 0.25%, but they weren't sure.
Yes. So with Huntington, we do offer, so the whole package would be, if you wanted a checking account, we do offer a special checking account. So normally there is a minimum balance and a monthly service fee that's required. But with OSU employees, you do get the checking account for free. It is the checking account that I have as a Huntington employee, so we offer it to you. You do get closing cost discounts on your mortgage. So it just depends on your loan amount. So the higher the loan amount would be the higher discount on your closing costs. And then we do a quarter of a percent for loans.
Are there any particular apps outside of your own financial institution that you would recommend for spending or tracking?
So I use Huntington, but coworkers of mine have used Mint and different things like that, and Quicken. You just have to be aware of some of the costs that are involved, because if you're paying a high service fee for it, you just want to make sure that you're getting your money's worth for it. But check with your financial institution. A lot of them do have calculators for your online banking that could set different parameters of spending and things like that. I use Huntington app for most of it, so I'm not a huge help on that, but always check with your financial institution. I know that a lot of them are doing a lot of cool things with their online banking.
Sure. One person asks, if you've recently bought a home or recently started a mortgage loan, how quickly would you recommend reevaluating the mortgage? And then when do the fees outweigh the mortgage interest reduction?
So that would be something for my mortgage officer to do. He has a calculator that can run the fees that would be associated. So if it's going to take you 5 years to pay back the fees, then it might not be a good option at that time. But if you've got it recently, then I would probably just wait till maybe the rates go down. I mean, they're pretty low right now, so you might have gotten a great interest rate. You could also look at different options. So if you want to do a 30-year or a 15-year ARM, meet with a mortgage officer that can help with that and can reevaluate different rates and different costs for those. But yeah, my mortgage officer says once a year just to look over everything and see if there's any new products that might benefit you better than the previous product that you had.
And one person asks, my husband and I view paying off debt differently. He likes the debt avalanche and I like the debt snowball. Do you have a process that you recommend?
I am not familiar with those terms, unfortunately. But with my husband and I, we try to pay off the stuff with higher interest rates first. And just window a little bit of it at a time. We try to prepay on our mortgage just to window that down also. So unfortunately, that might be a follow-up question because I'm not sure what those terms mean, but we'd be more than happy to go over that with that person.
So she commented that that is the debt snowball is the way that you described. So I think
okay, sorry.
Missy,
I haven't heard those terms, so I'm sorry about that.
Could you elaborate on the avalanche versus the snowball? If you just type it in the chat, I can read it. The avalanche is paying the least amount of loan on first, and then the snowball is the opposite.
Sorry, my computer keeps dinging. I turned it off, but it keeps coming back on. So if you can hear all those dings. What was that again, David? I'm sorry.
No worries. The avalanche is paying off the least amount of loan first, and then the snowball would be the way you described it. So
I just think it's better with the higher interest rate first, just because if you're carrying like a credit card with a higher interest rate and not paying more on that, you're just snowballing the interest rate and you are just carrying over that interest each month. So that would be a huge thing because it's just unneeded money that keeps added back onto your credit card. So yeah, definitely try to pay more on those. Obviously, in a lower interest credit card, just pay the minimums with that if you're having to decide between the two.
And then as the final question we have is, does Huntington offer HSAs?
We do, but not through our branch. We do offer it through our online. We have an online service for that. And I think it's huntington.com/HSA.
Awesome. If anyone else has any questions, please throw them in the Q&A if you would like us to ask. Otherwise, we will hang out for just another minute. And if not, we will let you go. When do you recommend a HELOC, HELOC?
So it just depends on what you would like to do for a HELOC. I have one just for an emergencies, just because some of the rates can get lower than some credit cards. But if you have the equity in the home, it's always easy to get one, and it's just backup money. So if you're wanting to do some home improvements, it's an easier way to access funds at a lower interest rate than a credit card. So it's basically a credit card on your home. So you would use any equity that you have in your home as a loan. So if you were to sell your home, you would have to pay off your mortgage and then your equity line. But it's just an easy way to access those funds, the equity in your home, for different things like that. And usually it is a lower interest rate. And most equity loans there might be a small service fee to open it, an application fee, but most of them do not have any monthly service fees if you do not use the loan. So if you have it just a $10,000 equity loan and you have it the balance at zero, you are not paying on it anything until you actually use it. So it's always good just to have it in case an emergency pops up where you need access to cash quick. And it's much better than using a credit card.
Follow up to that was, what happens if you default on your equity loan?
It would be like you're defaulting on your mortgage and the financial institution would have your house. So it's called a second mortgage. So anything that would be associated with the home, the first mortgage or the second mortgage would be transferred over to the bank.
And then final question, will having an open HELOC affect your credit score?
It is, yes, because it is open, so it will show up on your credit. But if you have it at a zero balance, it shouldn't negatively affect it, like you would if you had it fully used. But I haven't really seen anything on mine that has created a significant change in my credit score. And it could take, with your debt to income, it could be considered as debt, even if you don't use it, because it's available for you to use.
Awesome. So that's about all the time we have for today. I really just want to say thank you to Kristina. It was a great presentation. We really, really appreciate you being with us and sharing such insightful information. If anyone is interested, please visit Huntington's website, reach out to Kristina to learn more. She could definitely get you in touch with a mortgage officer, or feel free to reach out yourself there. I know there was a lot of questions about loans and such. So
yeah, I'm sorry.
No worries. It's all good. We're happy to have you with us. So with that, for those interested in your plan for Health Points, you'll be receiving an email pretty quick after the session with a link to complete the post-evaluation survey, and we will do our best to get this recording up by next Monday. So with that, I will let everyone go. We really appreciate you all being here. Thanks, Kristina.
Thank you.